everybody. Doing one more of these videos that I really hope are helpful. And today I have one of my favorite bankers. Like bankers and lawyers, I think to myself, how can you even have a favorite banker or a favorite lawyer? Because everybody just, you know, like my accountant, I love her, no offense, but every time I have to have an appointment with my accountant, I think, oh God, it's going to be a bad day. But Sam McElhaney is a commercial advisor for Pinnacle Financial Partners. She is one of my favorite commercial bankers because she's smart and she makes stuff happen. And so I wanted to have her on today to hopefully add some value, continue to add value in these videos with some of the amazing folks I know in the ATL and around the country. And Sam, tell everybody, what is your actual title? Because I just call you Queen of the World, best banker ever. What's your actual title at Pinnacle?
I'm actually a commercial financial advisor. So I help business owners not only with their business questions and needs that keep them up at night, but I can also help them with their personal. Case in point, I had a customer who just had a family member pass away and they need their estate account opened up. So that's something that I can take care of.
Yeah, so it's so interesting that you bring that up. And I hope I don't forget the first question I wanted to ask you, but it's interesting that you bring that up because I was talking with a friend of ours yesterday that we know who is a wealth manager. And he said too many owners try to separate completely their business financial affairs and their personal financial affairs. And too often in mid-market businesses, those things really do kind of flow into each other and you have to look at them that way. So I'm glad you brought that up. Sam, I know people that are afraid to call their banker. They're afraid to let their banker know what's going on in their business, the way they open up to other advisors. What is it that a banker should be doing for you? You're the CEO of a mid-market business. What should you be counting on your banker for?
Almost like a priest. We should have confessional time with one another. The banker should be coming to you with valuable information going on in the market. Don't rely on CNBC, MSNBC, Fox News, financial newspapers, reports, Google, things of that nature. Your banker should be proactive and having those critical conversations with you about the things that are keeping you up at night or things that you may not even be aware of. The Fed meets on a regular basis. Go ahead and have those conversations about interest rates, protection of your money,
Right.
New counts, new vehicles out there, things that are important to you, and updating those things on a regular basis so that your banker, know what's most important to you. And the things that are important to your CFO may not necessarily be the most important to the CEO, and make sure those align.
Give me an example of that. Can you think of an example of that?
Yeah, I've had companies in the past that I've worked with on the larger scale, because not all smaller companies, because my companies that I've worked with have ranged in revenue.
Sure.
They can be from 50 million all the way up to my largest company that I've ever worked with was a $150 million annual revenue company. And the CEO had no problem, investing in aggressive type opportunities where the CFO knew this company was eventually going to transition, maybe not to a family member, but maybe to more of a strategic staff individual. And so he wanted to make sure that they weren't investing in aggressive type products, stock market, things of that nature. Wanted to make sure the money was always liquid, available to touch. So making sure that both parties were always at the table at the same time and they were both hearing each other was extremely important, but also always having the CPA at the table at the same time, and having the insurance individual. And eventually, one thing that they ended up doing, because they were spending so much money on their insurance, we ended up getting those individuals into a captive insurance product. So, because it helped lower the cost and their responsibility
Tell everybody
to their
what's a
firm.
captive insurance. What's captive
It's
insurance?
a cool, and I call cool, and I need to stop using, jargon there, but it was an interesting way for that company to take a lot of the burden and a lot of the responsibility of shopping on a regular basis. The company's insurance products, their property and casualty, their workman's comp, their health benefits, and they got to hold the responsibility back to the company and put their premiums to work in a vehicle that put the responsibility back on the firm, and the firm could basically monitor and keep those premiums and stuff low and give their employees a better vehicle to give them better insurance options, just a better overall health plan, and they could go out and recruit better employees. So it kept their costs low, kept the employees' costs low. It was just a neat opportunity, and more companies should look into that as they grow larger in staff size, as well as they see their spend getting larger and they want to reduce those costs and reward their staff for doing so. So if
Yeah.
you haven't discussed it, they need to definitely discuss those options and
But
opportunities.
it's important, I think, that I mean, this is, you're telling your banker things about your business that a lot of people don't, that they think your banker just wants to know what your financial situation is, right?
Yeah.
And yet your banker should be a part of your advisory team that understands really the goals of your business, the vision for how your business is going to move forward also.
Yeah. And where you want to go. I
Yeah.
mean, if you want to pass it on to the next generation,
Yes, yes.
yeah. Or
Yeah.
if you want to strategically sell it, get the right people involved.
Yeah,
Correct.
I've had some people ask me about banks and they're trying to take their business to the next level, and they'll tell me they're with a certain ginormous bank, and I'll be like, "What? Why did you think you could get help there?" So talk to me about the difference between big banks and small banks, or what the experience you should have is the difference between big banks and small banks.
I've been extremely fortunate, Jane, to work for big banks, really large national banks. And then I've also had an amazing experience working for small community banks, meaning that those banks had less than 250 million in assets. And then they, of course, merged together over time
Mm-hmm.
and became larger banks, which are termed super regional banks. So they're just regionalized. They're either in the Midwest or they're only in the Southeast and serve a particular community. They've got their pros, both sizes. Sometimes companies want to go with a large bank because they have employees scattered throughout the United States. And so if they, for instance, on payroll day, give their employees their paychecks through direct deposit, they want to make sure that those employees all across the United States are able to get their money and get to branches and have no issues or problems because those banks are all across the United States. Whereas if I'm working with a company, small, large in size, but they only are located here in Atlanta, Georgia, then a community bank might be a better solution because they want to be sure that they can talk to Sam every day, every week, every month. So community banks have that capability, whereas a national bank, I don't need to see Sam. I don't ever want to see Sam. I just want to make sure my employees have the ability to go anywhere, anytime, any place and get
The
their money
community
without a bunch
bank
of
should have
fees.
the same vehicles, the same level of knowledge as a big bank, right? I mean, what I find is that your banker in a smaller bank, if you're a mid-sized business, is willing to kind of dig in with you to figure out how to get you what you need.
Um,
Get
Actually,
to know your business.
well, you would think that a smaller bank could do that, and they should. It's all about the person who's working for them. Community bank has some of the same capabilities as a large bank, but what if Jane's business obtains a contract that's overseas? Can a community bank handle the business of an overseas vendor? Maybe, maybe not. So that community bank may have to work in tandem with a national bank. So, or maybe that Jade's business needs to actually just go ahead and work with a national bank because they already have the capabilities to work with a foreign.
But a good banker is going to tell you that
Yes,
your
upfront.
relationship needs to change. But I have clients who I've had clients who I had one client who didn't get PPP money, and she was unfortunately dealing with the death of her father, right? So she wasn't 100% engaged in the business. And I said, your banker did not. I mean, you didn't have that kind of relationship with your banker where your banker was asking you like, why have you not applied for PPP money? And she said no. And I believe I introduced her to you actually right after that. So your banker should be proactively coming to you and looking out for you, as should, in my opinion, as should all your advisors, right? You should have that kind of relationship with your advisors where they are literally a part of your uh, kind of an adjunct part of your senior leadership team. So a lot of our work is with owners who are trying to uh, create more value in their business so they can exit, in 5 years, 3 years, something like that. And so, how should your banker be a part of that advisory team? I'm not even going to ask you, should your banker be on that advisory team? I think we've probably already alluded to that, right?
Yeah.
What's the role that your banker should play on that advisory team as you're getting ready to exit your company?
Up front, in the very beginning, your banker should know what your game plan is, from, start to finish. Are you wanting to, again, just keep the business in the family and just hand it over? Are you trying to sell it to another person, another party? How are you going to do that? Is it going to be through, you know, sell of a transaction? Is it going to be involving lending? Is it going to be involving, um, just transition situation? We need to know who the parties are at the table and be introduced to those parties.
We talked about your business wealth and for most business owners, their wealth is in the business, right? The majority of their wealth is
Yes.
in the business.
Yes.
And so, you know, having your banker be a part of that exit so that you are developing that plan for what's going to happen afterward is just really important.
Yeah, because when you sell your business, you're going to come into hopefully a nice
Hopefully.
sum. Yeah, hopefully a nice sum of cash
Yeah.
that you're going to have to meet with an advisor, and plan to live off those proceeds or make your next purchase of an asset, whatever that may be. And so your banker will hopefully, help you receive those opportunity and those funds and place them somewhere temporarily.
Okay, so let's say we're going to sell the business. Um, there are things that I think some business owners get confused sometimes. Most business owners, P&L and a balance sheet, and they totally get that and understand it. And they're looking at that EBITDA number as really the number for the value of their business, right? Or the number they're going to use as a multiple for the value of their business. But there are other things that come into play, Sam, that I would love for you to explain. Not trying to put you in CFO hat, but I know that you know these things, right? Which is working capital, for example. This is something that a buyer is going to look at in a business. Cash flow. I get a lot of owners that don't have a 13-week cash flow forecast, for example. And so buyers look at these things. Help us understand a little bit from a banking perspective the difference between those things.
Um, I think it's, I'm glad you asked, first and foremost, Jane. Cash flow is really important because it factors in, working capital where EBITDA does not. And EBITDA is a snap point in, like a real quick, tiny snap point in time, where cash flow is the inflows and outflows of money, the operating activities, the investment activities, and the financing activities of a company. And people really need, business owners in particular, really need to understand these terms. They don't have to be experts, but they need to understand and be able to explain them back, and why they look positive, they look negative, where they're coming from. Because if they can't explain them, and they're sitting down with a Jane, or they're sitting down with a Sam, and they come in and they say, I need to borrow money, or I want to make a purchase, or it's time for me to sell. The first question that I know you're going to ask, or the first question that I'm going to ask is, okay, well, why? And if they can't explain it, or they come up with an answer, well, because my neighbor said I need one, or everybody else is doing it, then we're going to have a tough conversation with them. Cash flow, the operating activities, investment activities, again, the financing activities, those activities right there, if you really analyze those three categories for a company, they will expose a ton of information about the company. They'll let you know if it's, how the business runs on a regular basis, if that's where they're generating their money, or you know what, the only reason the company's in the positive is because they are running off the borrowed funds. If it's the financing activities that's actually generating the cash in the company. That it's amazing how, when I ask for financials and trying to determine whether or not I can give people a line of credit or not, if I ask them for a cash flow statement, typically people will say, oh, what?
Yeah, I find a lot of business owners don't have a vehicle to look at cash flow. And I think it's critical to be able to manage your business, right? So
Right.
we're always trying to encourage people, I don't know why 13 weeks is that magic number, but let's get that what's coming in, what's going out, so that you can adjust as you need to, right? And you can see when you're going to have dips in your business and in your cash.
Well, and I love the fact that you're asking for that, because you're telling them, let's get out and budget for the next, basically a little more than a quarter. So you're asking people right now, let's predict into 2024.
Right.
Let's see where you're going into the brand new year. And I'm sure people are like, whoa, I can't even think about tomorrow.
Right.
Yeah.
And I like it because one of my favorite things is collecting money. I know I'm kind of sick, but I'm always like, why are these invoices still getting moved? Why is this stuff still getting moved? Why are we not getting this money in? How are we going to make that happen? So, working capital, describe the difference between EBITDA, cash flow, working capital.
Well, working capital, of course, involves your accounts receivable, your accounts payable. That's your inventory. Those are the things that I can lend, especially accounts receivable and inventory. That's what I can lend on. That's the current less than 12 months stuff. Okay. That's what I need to get a grasp on and figure out how you're basically accounting for cash. Okay. That's the important stuff right there for me to figure out. Again, how can I lend a line of credit? Or if you already have an existing line of credit, I've got to figure out, number one, is any of that what we term evergreen, been sitting there, not revolving? Okay, so maybe I need to give you a term loan. Can you afford it? Can you cash flow it? Do you have collateral for it? If so, term loan. And then can I also provide you with a brand new line of credit, reset you, and teach you healthy habits? Because a line of credit is supposed to revolve. Use it, pay it down. Use it, pay it down.
Yeah. So working capital is your accounts receivable, your inventory.
Cash flow statement involves, again, a look at your operating activities of the business. your investment activities of the business, and the financing activities of the business. So you're taking things not only from the balance sheet, but also from the income statement, and you're determining where your outflow and your inflows are coming, the sources of cash and your uses of cash.
Yeah. So you look at that for lending, but also I don't think owners realize that savvy buyers look at that for determining whether or not a business is really viable. Because to your point, EBITDA is a picture of a business at a certain moment in time, right?
Right.
It's not really an indicator of the health of that business long term.
No, it's the EBITDA part is how is the company actually earning its money?
Yeah.
Right here today. Whereas the cash flow statement is how are they actually putting their money to use? How are they taking it in? And then how are they sending it out?
Yeah. Yeah. Yeah.
So
I think that's important because I've met some CEOs that really don't understand that. They think that all somebody is going to do is look at that EBITDA number when they buy the business. And in fact, that doesn't really give you a complete understanding of the health of the business.
No, I mean, I think you and I've sat and talked about it, and very early on, I love the way you said, Sam, I tell my customers, EBITDA is a big picture. And we've got to really drill in and look at the little things.
Right, right.
And I loved it when you said that. And that's why I've loved working with you, because big picture, hey, is great. But sometimes that big picture is kind of fuzzy, like my background.
Yeah.
Let's get
Well, I
in
think
with
it's
this.
about helping owners understand what are the value drivers in their business,
Yeah.
right? Because at the point where an owner is looking to sell their business, that's what we're laser focused on, is the value drivers in the business. What is going to create value so that when a buyer comes in to do their due diligence, you have a healthy looking, viable, valuable business. And that's the way to get the most money for your business, right? That's the way to get the most money for your future or your next investment, whatever it is. So I always like to come to you for like the tip of the day, like Sam's tip of the day. And you were telling me the other day about, now you could pick your whatever your tip of the day is that you want, but I was interested the other day in a new SBA vehicle that you were kind of excited about it. I think it would be interesting to tell folks.
Well, and it's a standard SBA product, but man, the government is doing an amazing thing beginning October 1st. So if you've ever wanted, Jane, to help your clients, because SBA has such a negative connotation to it, but because of the SBA fees, they're expensive. But beginning October 1st, loans up to $1 million, they're waiving the guarantee fee, that 75% fee. You get the insurance on the loan, but normally you would have to pay a guarantee fee on loans up to $1 million, a certain percentage of that loan. You still pay the fee on loans larger, but all those loans, the fees are discounted going forward. But if your loan request is $1 million or less, beginning October 1st, that's waived, and that's unheard of.
Now, SBA doesn't, I don't remember because it's been a minute since I've done anything with SBA. Is it always a personal guarantee up to a certain amount, or can you do inventory against it? What is the risk for the owner for an SBA loan right now?
If you own 25% or more of the company, and it may be 20%, I apologize. To be safe, I'd say 20% or more of the company. Personal guarantees are required.
Okay.
So just keep that in
On
mind
all SBA loans.
on all SBA loans. And they are always going to have to they do their best effort to collateralize the loan 100%. So if the business cannot support and collateralize the loan 100%, then they'll start looking at personal assets to collateralize the loan as best they can.
Right.
So that could include home, equity in homes. And if that's not available, they can also ask for term life insurance, things of that nature. But if people are, you are your business, and if you're willing to do it and you want to get, that additional capital, proceeds, things of that nature, and while they're doing the waiving of the fee, rates are just as comparable as the term loans, and you get longer term periods.
Okay.
So instead of a
And
traditional
so what
5 years,
SBA loan is that? What number?
it's the 7A.
The 7A. Okay.
Yes, ma'am.
All right. Tip of the day then. Waive of a guarantee fee starting October 1st of an SBA loan up to $1 million.
Yeah, that's a
But be
good deal.
careful about, it's personal guarantee, which means that you're putting your personal assets and the assets of your family up against these loans. But you have to do that anytime you don't have assets in the business to put up against the loan. So that's the risk. People always think that owners of businesses are just living large, but they don't realize the risk, the financial risk and other kinds of risks that owners take to run a business. I think that's very underappreciated by folks who don't run a business and just kind of see it from the outside. Sam, how can somebody in the South, anybody who says y'all, get in touch with you if they're looking for an amazing commercial banker?
Same phone number for 18 years now. Here in Atlanta, 678-524-7133, or my email address is sam.mcelhaney, MCELHANEY at Pinnacle, or I'm sorry, the initials P as in Paul, N as in Nancy, F as in Frank, P as in Paul.com.
Okay. And you're on LinkedIn, right?
Oh, absolutely. Every
Okay.
day.
So you can send a message to LinkedIn. I appreciate you so much.
I appreciate this opportunity. You are an amazing person.
I appreciate that you have been helpful to my clients, and you're always there to ask, answer questions and just be available. And thanks for sharing your expertise.